Order filled.
Before you decide to hit buy or sell to enter a trade, you first need to determine what is your risk on that trade. How much money could you potentially lose if this trade does not go your way? Now, there are a couple of different ways that you can use to determine your risk. Are you the type of trader who risks a certain percentage? Are you the type of trader who risks the same dollar amount every single trade? Or are you the type of trader who risks the same amount of contracts or lot sizes every single trade? Now, your risk should also be determined upon how many confluences align with your bias.
Ideally, you want to put on more risk when you have more confluences aligning with your bias so that you can maximize your profits, and you can do that with more confidence because you know that the more confluences that align with your bias, the higher percentage that you have of the trade hitting your take profit, as opposed to you want to put less risk on when you don't have as many confluences aligning with your bias because there's a lower percentage that the trade is going to hit your take profit, and you definitely don't want to lose more if the trade does hit your stop loss. Proper risk management can mean the difference between a profitable week and an unprofitable week. For example, last week I went 3 and 1, starting the week off in the red and then going on a 3-day winning streak, which ended the week in profit. However, this week I started the week strong, winning my first 3 days and then losing on my last day of the week, ending the week in the red. All right, let's look at Monday's setup. So, Monday, as soon as we came to the markets, we did notice that we have this support that was holding right here. So, we love this 5-minute support right after an uptrend. And I'll say uptrend because we have a break of structure right here. We broke these highs, this lower high, this swing high, and then we created a higher low, higher high, higher low, and we were holding this support right here. So now after we held this support, I did see that we hit 1, 2, 3, and on the fourth time we formed this bullish engulfing candle. So now this wasn't enough just yet for me to get in for the buys because we do also kind of have this little resistance here that's holding as well. We kind of have a little consolidation zone. So I did want to see a little bit more confluence that we were going to break these highs and at least possibly move up to where we have these equal highs here that I marked off. So once we got this bullish engulfing candle, I said, okay, let me start getting ready to look for buys. And we got this nice big bullish candle right here. I did get in, I think, just before the candle closed, put my stops just below that candle because I felt like once we broke these highs, they would act as now support for if price came back. So I got in. I didn't get out at this red candle right here because it did just miss my TP1. So I held, and I did like that I saw these rejection candles here, wicks to the downside that let me know that price was still ready to push bullish. Then we got this nice big bullish candle here. This is where I closed my 1-to-1. Now I did only use 2 contracts with this position, and I feel like I definitely should have used 3. My stop loss is not that big at all. And then the fact that we were getting all of these signals, we have the support, we have structure being broken, we have, these huge bullish candles, we're getting some momentum in the market. We knew that we would at least get a 1-to-1, or we could at least retest these equal highs, or at least I strongly felt like the market was giving me signals that we were going to at least test those highs. So I should have gotten a little bit heavier, and then that way I could have closed more positions at the 1-to-1, but that's okay. We did close out with about just under $300, I want to say, on this position. Had I used 3 contracts instead of 2, or closed both of my positions, my contracts at this candle, which honestly I feel like I should have done. Once we got this red rejection candle right here, I think that was definitely enough confluence for me to show that the market was still kind of testing these highs and not quite ready to break above. So I feel like when I did get to the 1-to-1, I probably should have closed both of my positions instead of leaving a runner because this candle happened. It pushed up and then started pushing down so quickly that I couldn't even really get out when I wanted to, which probably would have been back at the 1-to-1 once I saw this candle flip red. Instead, I ended up getting out closer to my break even mark, which we still profited. A win is a win. I'm not mad at that, but I do wish that I would have not been a little bit greedy and just closed both of my positions at a 1-to-1. On Tuesday, we caught a simple supply and demand setup. So when we came to the market, we do see that gold is kind of in a little bit of an uptrend. We do see there's a little bit of consolidation here in this area, and then we just started pushing up. We got a higher high. I will call this a higher low, higher high, higher low, higher high. So now we were trending a little bit. We were trending upwards for quite some time. There hasn't really been any pullback. So we didn't really want to hold buys for sure, because you don't want to hold a trade in the same direction as a trend when the trend has been going on for quite some time, because you don't know when that trend is going to end. And this is a perfect example, because although the trend didn't necessarily end, we did have a pullback, a significant pullback right after we exited our trade. So when I came to the market, I did see that we have a demand zone sitting right here. So we marked this up. We have this demand zone. Then we have price where it came back down, and we got this red candle right here where it tapped our demand zone, but it did not break these lows right here. And although it closed just barely inside of the zone, it was enough, it wasn't in the zone enough for me to feel like the bearish pressure was going to continue. And so once we saw this candle wick down, this is a liquidity grab. This wick came down beneath this wick, but the candle did not close beneath the wick. So that was another confluence. So once we saw this candle open up here and it broke above and started pushing up, once it broke the high of this candle that tapped our demand zone, we hit buy right in the middle of the candle. We jumped in for buys right here. We got our 1-to-1 pretty quickly. And then you see again, as soon as we hit that 1-to-1, this candle reversed. Now, I probably should have again closed everything here, but I did like the demand zone. I did like that we were with the trend. All of the confluences were in our favor. I don't really love here that when we did get into the trade, we do have two moving averages that were in our way. So that also was a confluence for me to kind of say, maybe I shouldn't hold this trade because maybe it's not going to run. When we have moving averages in the way, that's a potential stopping point for price. And you see that price did kind of come up here. It was kind of consolidating near these moving averages before the trend reversed. We made this lower high, and then we started making lower lows, lower highs, and you see the trend kind of change. So we did get in just before the reversal. I do feel like I should have closed everything at 1-to-1 as opposed to leaving a runner, because of the fact that we had these moving averages. Once I saw that this candle did not close above those moving averages, I probably definitely should have closed everything. Instead, our runner got stopped out somewhere around here and break even. But overall, we still got a profitable day. I think we profited about just over $600 on Tuesday with closing out those two contracts. I am glad that I raised my contract sizes for Tuesday as opposed to Monday, where we didn't make as much because of the fact that we didn't use as many contracts and our runner got stopped out at break even. But overall, Tuesday was a really great day. This was a great win for us. I do wish that I would have closed all of my contracts at the 1-to-1 as opposed to letting my runner get stopped out. But all good. We still had a great win. All right, so let's take a look at Thursday. On Thursday, immediately we did notice that we had a support here that was holding after an uptrend. We did have gold pushing upwards for basically the whole week. It was pretty bullish. We had some minor pullbacks, but you can see higher high, higher low, higher high, higher low. It was pushing up pretty much all through London session. So this was a minor pullback, but we did see that it was holding its support, so that was good. That kind of let us know that gold wasn't ready to flip bearish just as yet. So we came here, we saw that we have 1, 2, 3 touches to this support area, and then we have this long wick that came down and kind of dipped into this consolidation area. And then I would consider this a liquidity grab because we do have a long wick here, but then the candle itself closed at the same spot that the previous bearish candle in front of it closed at. So I would consider that to be a liquidity grab, which is even more confluence that we should be looking for buys. Now, in addition to that liquidity grab, I also did see that we then formed a lower low, lower high, but then we formed this higher low and then another higher low right here. So once we form this higher low right here, then I said, okay, let's start looking for our buy position. So now I did see that we had this little bullish candle, but I didn't love the size of it, especially compared to the bearish candle right in front of it. So we did wait a little bit more. We did acknowledge that we have a resistance here that touched 1, 2, 3 times it was respected. So I did really want to see a break above this resistance before I started looking for my buys. So we did get this green candle right here that closed just barely above that resistance, those previous candle closures. So at that point is when we started looking for our buy position. We kind of waited for this window to wick down a little bit before we jumped in and decided, all right, let's jump in for the buys. So now I did end up holding this trade a little bit longer than I should have. I got a little bit greedy and I was looking to take it up here to these highs where we would have got a 1 to 3, but instead it did give us at least a 1 to 2 Now, where I got greedy at is that you can see that there is a supply zone sitting right here, right? So once we ran into that supply zone, I should have definitely acknowledged that to say, okay, this could very well be a stopping point for price. I did acknowledge that price was pushing upwards for all of London session. So we don't necessarily always see a full continuation during New York session of whatever the trend was in London session. And this definitely is a significant supply zone where we're coming off of an uptrend. We formed a supply zone, and then we did start a little bit of a downward push here. So I definitely should have acknowledged that and got out at the 1 to 2. Instead, I was greedy and I did end up holding. I got out at my 1 to 1, and then my runner got stopped out at break even. All right, let's get into Friday. Friday is actually the day that ruined my week. So let's talk about what we saw there. So when I came to the charts on Friday, immediately I did see that we have this demand zone sitting right here. And ultimately, I wanted to see price, even though it was consolidating right here, I wanted to see price come down and tap this zone before pushing up for buys. Now, because of the fact that I was already 3-0 for the week. I definitely should have been more choosy with my setups on Friday, and I absolutely should have been more careful with my risk. I definitely should have lowered my risk on Friday, if any day of the week, because of the fact that I was already on a 3-0 win streak, and I didn't want to give back any of my profits for the week. I wanted to end the week green and definitely much closer to my profit target for my 100K combine. So I saw this demand zone and I was waiting for it to tap. I did not see it tap, but then you see price started kind of giving me some indications that it wanted to push up. So once I saw this bullish candle print, okay, yes, we closed, we didn't close above anything, but then we got this candle it didn't even wick down close to the rest of these wicks, right? It kind of wicked down to where the lows or the closing of these candles are, and then it pushed up. Not a huge candle, but decent. So now that definitely started to give me a little bit of an indication. Okay, maybe we're going to go for buys. We've been holding this area, we're consolidating, and now we're starting to push up like we want to go. So once we got this Maribozu candle, that was my indication to get in for buys. I said, okay, wow, Maribozu, that's very clean. No wicks at all on this candle. Let's take a buy. I took a buy here, marked up my 1 to 1, and unfortunately, it just did not go my way. This candle pushed up, and then it rejected immediately. Then we had this candle. This candle made me feel good because it did start to push up, it pushed up, and then it started to reject. Now, I could have gotten out here, but for me, I'm like stop loss or take profit, right? This is a 1 to 1. It's a very small trade. Let's just see where it goes. We still have some confluences in our mind. Now, where I broke my rules at here was that we got this bearish candle that pushed up and then it flipped bearish and started pushing down. So now this is the candle that took us out. So we got stopped out right here. And then instead of just being done for the day, walking away from the charts, I waited and I saw that we had created another demand zone right here, right? So I saw this demand zone right here and I said, okay, it just created another demand zone when it was consolidating here. And instead of tapping the original one that I saw, it's going to tap this one instead. And then we're going to go up. So now, once I drew out this demand zone and I saw this candle come down here, the candle that ultimately stopped us out, and I saw that rejection, I said, okay, let me get in aggressive for buys. And I definitely should not have done that. It's Friday, number one. I went 3-0 so far for the week. Number two, I should be closing out my trades and being done for the day. I should have been way more careful, and instead of getting in aggressively on this wick, I should have waited until this next candle broke this candle high, because then that definitely would have gave me the indication that, okay, I was right about the buys, but I just got in too early. But realistically, that's not what happened. I didn't wait. I got in aggressively. And then what happened? This candle started to pump down really hard. So once it broke the low of this candle, that's when I got out, took 2 losses, and I ended up losing $1,500 on Friday, which gave back the $1,300 that I made the 3 days prior in the week, and an additional $200. So instead of going 3-1 and ending the week profitable, I went 3-1 and ended the week in a hole. Overall, we are still up on the challenge, about $230. So next week we're back at it. We're going to make some adjustments and we'll be hitting that profit target soon. So let me know down in the comments if you guys like these trade breakdowns of the trades that I'm taking during the week. And don't forget to like and subscribe so you can follow along on my journey to passing my 100K Top Step Combine. Catch you guys in the next one. Thanks for watching.